Hey, good afternoon, guys. This is Jeff. Tim had to be out of the office this afternoon for some kids' activities, so you get me today. So, starting off with corn here in the March contract, everything looks pretty decent today. We had the big reversal yesterday, but we turned around and made another reversal today. Kind of getting rid of that big reversal a little bit. Still, we probably need to get above the high to really denounce that whole bar. We have some resistance, obviously, I put up here. We've got the 38% retracement, which we've failed to close above since, back in here, which is at the 490 level. Mid-March, or mid-November is last time we kind of got through that number, but, we reversed from there and sold off. We're above our line. Really need to get above this number, and then our next resistance comes in, this 496, and then at the 68.18 resistance, a little above 5. So we'd like to see us get through those numbers to really get a good run going. And if we do get above these highs, you might have a little bit of a bottom head and shoulders, which actually counts to retracing this whole move back into the 520 range. Obviously, that's no guarantee. There is a lot of junk to work through, but kind of numbers we're looking at. If you're holding grain in the bin, we'd say just kind of sit and hold it for a little bit, see what's going on, see if we can get some more strength. We definitely don't want to see, breaks back below our line, or kind of below these lows over here, because that means we probably retest 470, and obviously below that's no good at all. So stay tuned, keep your eye out, don't fall asleep here if you have risk. If you have corn sitting at the elevator in your bins, you do have risk to the downside. And if you want to talk about how to get rid of that, please give us a call. On the December corn contract, where to go? We've got these boxes up here that we want to talk about. Some of you we've talked about as far as our whole farm delta, as far as our new crop corn is concerned. These boxes are kind of our zones we're looking at. Right now, we talked about kind of got to get hedged on this bar here because we were breaking below. We kind of reversed from there. So we're staying in this box, so we want to stay pretty neutral. That means if you did sell some 24 corn, get some calls bought on. Let's get that farm delta to neutral on those bushels, and just kind of wait and see here. We tested the bottom of this uptrend line and kind of still closed below this lower one. So we're not out of the woods at any stretch of the imagination. We did have a nice reversal today, but we need to get up and out of here to really get really bullish on this thing. So obviously anything above these closes, we really like to be fully long in that situation. And if you have, like I said, if you have 24 sold already and it gets above here and you need help figuring out what to do, please give us a call. And obviously below these lows, we want to be fully sold. We need to be hedged as much as we can there. So again, if you need help on how to do that, even though we don't really know how many bushels we're going to have, please call us. We'll help walk you through that and get you what you need. So let's talk about Kansas City wheat. We'll jump into there. Let's see. Here's the March contract. We had the reversal yesterday, which didn't look good. We talked about we might need a pullback, getting kind of a little bit oversold in like the stochastics, but not really in the MAC. But in a couple of these oscillators, getting a little over bottoming. But today we actually reversed that back up, which is really good. We might start seeing a little weakness if we do get up in here and if these start rolling over, we might have to think about doing something, but we also might just need a little bit of a pullback before we can go higher, just to work off some of those overbought conditions. So just kind of have to see how the market moves and reacts here. Have a lot of resistance in this 670 to $7 range. There's a lot of resistance back in here as well, that we might have to work through, or you actually pull back to get a little more momentum to rush back through there. On the July wheat, everything's good to sit and hold and see how this reacts, just like the March contract. Uh, we had the reversal yesterday, but reversed it again today. So we're back up out, back above the last couple days closes. So everything looks good there. Now, when we're talking about, we've talked to some of you guys about our system and that nines above our line. Sometimes it's going to tell us we may need to get some of our risk out the door for July 24. So we'll have to see how that works out. If on, Monday or Tuesday we have that nine sitting there, and depending on the action, we might have to talk about that. So again, this has got that same resistance, and it's a little higher because of the contract, but 680 to 705, somewhere in there. There's a lot of resistance back in here because you got all of this stuff, and then you got some lows in here that it's going to maybe take a little bit. We may have to back up a little bit to get momentum to blow through that. So obviously we don't want to see closes below our line. We're going to be talking about hedging at that point. So again, if you have wheat in the ground and want to talk about needing hedges and thinking about that stuff, give us a call and we'll help walk you through that as well. Soybeans, January contract had a really nice day today. You've got an outside bar, key reversal, triple close, which is really nice. Back inside this downtrend channel. We talked about 13s are usually sometimes the end of these lower trends, but there's always times that we actually get a little more push down, and may need to roll back up from there. So sometimes you just got to get a little blowout and then go again. Obviously, we want to see it get back above our line, get outside of this lower trend channel, and try to come up, at least test this upward one. So that's kind of what we're looking at. We like the blue too. We like the reversal action. So everything's looking good. We got closed back above, these levels here at $13. Kind of blew through that today. So everything's looking good at that moment. So at the moment, if you're sitting on beans, kind of sit and wait here for a little bit, and we'll talk about that. Just kind of let this action work itself out a little bit. November 24 beans didn't quite have the outside bar combination. Did have the reversal. Did hold, we did hold all these levels, which is good. So we'd really like to see it get back, above this upward trend line and above our line. So that tells us we can get some more higher prices going. But otherwise, the November bean contract probably just going to be sit and hold for a minute as far as any hedging. Kind of let this action play out a little bit. Anything below 13 on a closing basis probably is a good sign we need to get some hedge for 24. So, or sorry, 1260. I was mixing my contracts up there, but 1260, kind of that low from yesterday and today. We're going to be talking about hedging 24 November beans. So that's kind of what I've got for you today. If you have any questions, please don't hesitate to reach out. We'll try to get another video out tomorrow. It may be early that we get that out because we got some things going on tomorrow afternoon, but we'll see how the action is and keep you updated. And as always, there's risk in trading futures and options, and trade in light of your financial conditions. And you have any questions, give us a holler. Have a good day.